Hello everybody, Randy Patrick here. Welcome to Housing Bubble 2.0 News of the Week, or as I'd like to call it now, As the Virus Turns. Clearly this is the news that's dominating pretty much every news wire, every website, everything you look at. This is what's going on. This is big issue for the world and for people who live in North America, USA, Canada, etc. Every country, a lot of stuff happening here. So clearly we're seeing a lot of the economic, I guess you could say, impacts of cities, states, places just being shut down just to have that quarantine period where we're not in social contact, we keep distance, trying to contain the virus. Clearly it makes sense. However, it's going to have multiple implications, huge financial implications for the country and people in general. So little update on that right now. We'll get into it. First of all, if you're not already a subscriber to this channel, please click the bottom right button there on the screen, join. I'd be most appreciated to help my channel grow. Thank you. Okay, number one in the news here, Goldman Sachs claims a staggering 2.25 million people just lost their jobs and predicts initial jobless claims will increase to the highest level on record by far. So the prediction comes courtesy of analysts at Goldman Sachs who suggest the country saw an unprecedented surge in layoffs with an estimated 2.25 million people filing for unemployment in the last week. That would shatter the previous record of 695,000 initial jobless claims, which was set in 1982. So we're talking about, we're almost, 92, 2002, 2000. We're talking almost 40 years here. So, that's a pretty big number here. Our estimates based on these new reports suggest that nationwide jobless claims will rise to roughly 2.5 million in the next claims report covering the week that we just had, okay, from March 15th to 21st, a roughly 9-fold increase over the pre-virus level, which tends to make sense. We all know that, you're seeing restaurants close, bars close, as I said, all the, shopping centers closing, retail outlets closing. We're seeing all the, amusement parks and tourism and things like that shut down. So there's just so much that's, it's just, everything is just domino permeating throughout the country here. And this is the situation. That's why the biggest sources of mortgage financing are already saying that they are pausing foreclosures and evictions for at least 60 days and that certain borrowers can forego their mortgage payments for 12 months. That's also why states and even one of the nation's biggest banks are saying that affected borrowers can pause their mortgage payments for the time being. So what we see now is, again, corporations and banks and finance people who know they're going to get demolished with what's going to happen the next little while are already saying to people, hey, we're going to work with you, etc. I will talk about this in the next video I'm going to do. I'm going to get into it in much detail. This all sounds good right now on the surface. I can tell you that it's going to be much worse than they can handle, and it's going to cause greater problems. All right, we've seen already what what happened in the last housing crisis when it was just a economic crisis and recession, not something like this. So this is going to by far dwarf what happened last time. There'll be a lot of people will have a lot of issues going forward. We'll get into that next video. Okay, but again, Goldman Sachs claims 2.25 million people just lost their jobs. We're going to see a lot more. Now, I saw this article yesterday that came out, and really it's a little bit of an editorial article, but it's about mitigating the panic and the spread of the information. I guess an email came out yesterday from the Labor Department, or actually on Wednesday. And the Labor Department was instructing state officials to only provide information using generalities to describe claim levels, very high, large increase, until the department releases a total number of claims next Thursday. So in the email, which was shared by the New York Times, noted that the reports were monitored closely by financial markets and should therefore remain embargoed. States should not provide numeric values to the public. The Administrative Department's Office of Employment Insurance was saying. So we really now have the government kind of going, we know it's going to be bad. We already see what's happening. Let's kind of contain the disaster, let's contain the information. We don't want to alarm the public. So to me, this is just, with Goldman Sachs claiming we got this huge increase here, we're going to hear more information coming out this upcoming week. It's going to get bad. It's going to get worse before it gets better. This will have another domino effect on people. All right. It's a little more financial talk than housing today, but I think it's important. What I'm trying to do is set the stage as to what's going to happen so we're not surprised. And remember, the last housing crisis started really in 2007, 2008 timeframe. And we were blindsided by that because, number one, we really hadn't experienced something of that great a magnitude. Two, lenders were not prepared for the disaster and working with people in the situations. The court systems were not prepared for the foreclosures, etc. So a lot of that caught us totally by surprise. We muddled our way through it. We're still actually feeling the effects from some of that back in the day, believe it or not. Now we're going into this with a lot more eyes wide open, a lot more social media and information on the internet available that we can look at and make our own minds up. Not all the information may be accurate or correct, but still we have this source of information. So really it's up to us to figure out how we can use it and better our positions with your family, your finances, your housing, whatever it is. Okay, so let's keep our eyes wide open here. That's what I'm doing. Banks are going to drown in an ocean of defaults. I want to sort of lay this out here. This is a nice, interesting article. And when you actually take a look at what's going on, it's like, this is massive. So the banks are about to drown in an ocean of defaults. I'll talk a lot about more in coming days, but briefly, there's $250 trillion in global debt right now. Mortgages, credit card debt, business loans, government debt, etc. So, I focus on housing clearly, but that's just part of this overall situation where people are going to be having debt issues big time as time goes on. And banks own a large portion of the debt, so we're going to have some problems there. The virus crisis is going to trigger a wave of defaults from consumers, businesses, and even governments. Think about it. Tourism alone makes up 10% of the global GDP, the global gross domestic product. Revenue in that entire sector, hotels, airlines, cruise ships, has collapsed. Many of those companies are not going to survive. The crash in oil prices is going to wipe out countless oil companies, subsidiaries, workers we're feeling the effect of it the whole bit. It's just, again, everything just domino trickle down effect. Many large retail chains, which were already struggling in the age of e-commerce, will likely declare bankruptcy. And we know the past 2 years we've seen bankruptcies in that sector increase, huge. Countless businesses around the world have temporarily closed due to public health policies, and many of them will simply just go out of business. Why? Because they can't recover, which, obviously that's the case here. Most of these businesses owe lots of money to banks, whether it's small businesses work on the working credit line, or $34 billion in debt that American Airlines owes. So the defaults are going to be massive. On the top of that, millions of people are going to lose their job and unable to make payments on their credit card debt, auto loans, and even mortgages. This is typically how it goes. You pay for your essentials. Essentials are cell phone, internet, keeping the electricity on, right? Putting food on the table, and then you'll default on things that you can hopefully negotiate on or push off or don't need right away. So things like rent and mortgages will be the first non-payments out there because that's the easiest to sort of play the game with at this point in time. And we'll get to that in 1 second here too. So just think about this. Again, there's $250 trillion in global debt right now. Total bank capital worldwide is less than $10 trillion. So those numbers don't add up, all right? So if the coming defaults trigger a mere 4% loss in total debt, it will exceed the entirety of the global bank capital. So that's pretty major. So we have a lot bigger situation going on than just micro level where we are. So this looming wave of loan defaults over the next few months could spark a crisis in the global financial system that completely dwarfs what happened back in 2008. So that's what I'm trying to impress upon you, is that I'm looking at comments, I'm looking at other things I see online, and listen, I'm all for optimism. I'm looking, I always want to see the good in people, the good in the news. Let's keep the morale up, the whole bit. It makes sense. But when it comes down to it, we're going to have some pretty tough times here. But again, we know it going in, so hopefully we can be better prepared and be able to react from a housing perspective as well. So that's the scoop there. Now, I want to touch base on this. I know I've seen other videos on it. It takes me a bit to digest some stuff because I want to make good impact and discussions with you guys here. So Fannie Mae, Freddie Mac, HUD suspending all foreclosures and evictions. So basically you've got HUD, Department of Urban and Housing Development, suspending all foreclosures and evictions until the end of April. What does that mean? So when HUD suspends foreclosures, that means they're suspending the foreclosure sale. So if a house has a foreclosure sale date, say March 31st or whatever the last day in March is, if it's a weekday, and if that mortgage is underwritten by HUD, by the government, FHA, back loan, VA, whatever, then they're going to suspend that foreclosure. So please keep that in mind, because I know that some people are going to go, oh, thank gosh, all foreclosures are suspended. No, it's only for HUD. So this, and we'll talk, I know people are already jumping the gun. Wait, okay. This came out as talking about HUD. So that's what HUD's going to do. And again, all foreclosures and evictions till the end of April. With evictions is basically evictions in process. What I mean by that is, as a landlord, you've already won a judgment, and the next step is to post the eviction on your tenant's door, and if they still don't leave, the sheriff comes and physically drags them out. So that's the ultimate end part of the eviction process here. So those people aren't going to be pushed out in the street right now. Now this is only for 60 days. So once 60 days is over, then all these foreclosures and all these evictions will just be reset in the system, because the judgment's already been done. So the dates have already been set. They're just going to reset the dates, and so there will be more things happening now. Where is the advantage here? Well, from a real estate perspective, the advantage is, okay, can you help people through short sales or other means, because they've been given a little bit of time frame, which now opens the door to help these people, as opposed to being jammed up right against the sale date where we really can't help them. So there's a little opening there. And to be honest with you, facing a foreclosure or doing a short sale is going to buy them more time on their property and walk away with a settlement of debt, as opposed to a foreclosure judgment and some pain and suffering that's going to happen to them financially afterwards. So that's just my 2 cents there. So realize that that's how the moratorium goes. So 60 days here. Could they increase it? They could potentially. We don't know what's going to happen about that. And again, we'll just see what FHA does. But again, wanting to make sure that you don't think it's just any old mortgage. It's FHA, so government-backed mortgages. These are the ones that HUD can technically suspend. All right. Now, people are detaching, from what they paid and looking at what like the market is now. So you got to take a look at what you bought the house for last month, 6 months ago, whatever, and where things are at now. We're going to see some carnage out there. Auction.com reported in January that experts predict foreclosure and REO meaning real estate owned, which is bank-owned properties, inflow will increase in 2020, with most of the influx coming from government-issued loans. So the interesting part is, what have we been talking about with FHA-backed loans or government Freddie Mac, Fannie Mae loans in the past year? How have we been discussing them? But we know that the criteria is that they're becoming more competitive out there. They're relaxing some of their standards. Debt to income ratios are rising for loans there. FHA allows you to have low down payment. FHA allows you to get seller concessions on closing, stuff like that from the sellers. So most in the default servicing industry expect government-insured loans to be the primary source of increased foreclosure inflow in 2020, even in the absence of a widespread recession or housing downturn. Now, step back a bit here. Earlier in 2019, I was reading some reports. There's industry conferences that go on all the time, whether it's mortgage, housing, default servicing, which is kind of the foreclosure market, default servicing. And I recall a video where I was stating the fact that out of this conference that all the servicers and lenders had, 75 to 80% of the lenders and servicing companies were stating that they're going to beef up operations in their loss mitigation default servicing departments. Well, why would they beef up operations? Well, this is back, say, 6 months ago. Well, because they're already seeing trends of non-payment. They already know that we've already peaked in the marketplace as values are concerned. They already know what's going to probably happen the next little while. So there's no surprise here. So even before this virus has hit, saying, they already were thinking that we're going to have a bigger year here. And this is coming from the Senior Vice President of Strategic Partnerships and Business Development at Auction.com. That's a rational conclusion given the rising risk profile of FHA-backed loans originated in the last 5 years. So FHA-backed loans are riskier, all right, and that's what we call the mortgage or the QM patch. So if you recall, The qualified mortgage is kind of I guess you could say, a structure where, everybody's the same and we run by the same rules. Bank of America, Wells Fargo, other loans, so, they have qualified mortgage applicants and you're under a qualified mortgage. Well, FHA had something called the QM patch, the qualified mortgage patch, which was this little kind of, I won't call it a law, but little exemption that they could raise debt to income ratios from 43% to higher. So they've had that the past few years. So therefore the government backed loans, traditionally are riskier, and that's what people are saying right now. That's what the industry is saying. So the expectation is that's going to increase. That was already set to increase prior to what's happening right now, what will happen in the future. So I just want to get people on board here as to what is, what could happen. I've been watching the past couple of days. I'm watching videos from investors, from financial analysts, and everyone's giving their 2 cents worth with respect to what's going to happen in the marketplace. Am I a pessimist? Maybe I am. I don't know. I think I'm an optimist as far as personality and how I view things, but I'm a believer in what I've seen historically with the last housing crisis. I'm a believer as to what I see, in the industry, in the housing market, the triggers and the changes that are happening that maybe aren't apparent at the retail general public level, but what I see behind the scenes. I know a lot of people, and I don't care, but you make comments going, Randy's doing the same old video for the past 2 years. When's the housing bubble going to burst? Well, it typically needs to get to a point where values are overvalued. It needs to get to a point where some event triggers the onslaught, and we're kind of at that point right now. So even though there'll be some groups and government policies and banking policies that will try to mitigate the disaster, I don't know whether the volume, and I don't think everybody can fit into that box of being served and helped, number one. 2, if we go back in time to the last housing crisis where the government did put things in play, albeit towards the end, the lenders couldn't respond or didn't respond, didn't want to respond. And I think we're going to see some of that again. So we'll talk about that in the next video. But realize that, we got fewer buyers looking for homes. A little uptick in mortgage the past week. Why? Because the mortgage companies can't handle the refinance volume going on right now. People are refinancing now at the peak, still at what I would call peak values. Even though we've seen some slide, we haven't seen 5, 10, 15, 20% declines in price points as of yet. So you're refinancing at peak value right now on the on the cliff edge of the cliff, where there's a big chance that we're going to start to see some values go down in the next little while. Because if people are stuck, if you're not working, if you can't pay for certain things and you're stuck financially, people are going to sell their investment properties. People are going to sell their homes and try to do their best to cash out, because if you can't refi because you've lost your job or other financial circumstances based on what's happening with the shutdown, this virus, you're going to go to your biggest and best asset to draw cash, and that's going to cause some problems. So if you can't refi, you got to sell. So I have to sell too. So you and I are selling. We're on the same street. What do we got to do? I got to drop my price so I can sell before you. So that's how this may play out, but just keep that in mind. But I think today's takeaway is that the number one news item is the Goldman Sachs claiming 2.25 million people just lost their jobs. It's going to get a lot worse and a lot more. Every day on Facebook and chat groups, whatever, we hear neighbors saying, my son just lost his job. My daughter got laid off from part-time jobs. They were kind of open and doing takeout delivery, but now that's not even happening anymore. So all these little things happen that add up to much larger problems, which will affect housing. All right, guys, that's it for this video. I'll try to make them a little shorter because the last one was long. I know, lots to talk about. If I can jam through them fast, I'm going to. We're going to hear a lot of information coming quick to us these days. So, having said that, thank you for the views, likes, comments. Everyone, be safe out there. Keep your social distancing. This is a great forum to talk about stuff and to communicate. So keep that in mind. Also, I want to be clear here on this one because I've seen some emails that came by today. I am not personally looking to buy turnkey investment properties that you may own, okay? I'm here to help you invest in turnkey properties that we're sourcing down here where I live. So please keep that in mind. I'm not looking to buy, other locations. I'm really sort of focusing on what we can do to help you guys down here. I've got a turnkey setup where we can find you the financing. We can work with you to property, the whole bit. So I got it all laid out. inquire with me, send me an email, put your phone number in so we can talk. So I know I'm talking to some people today as well too. So keep that in mind, that we can help you look for stuff here, which is great. Also, think about what my ultimate platform is with respect to housing crisis and how to deal with that and what's going to happen in the future. You may want to look at it. You may want to get involved in some short sale stuff right now, because that will be that will come up. As I said last video, it's going to rear its ugly head. Some people think it's an ugly head. I think it's a very pretty head, to be honest with you, because that's where a great opportunity will come for people to buy properties at a cheaper price, mitigate some issues and disasters for the homeowners, get yourself a nice home, and also maybe learn to become an investor, etc. So anyway, guys, appreciate the time. We'll look forward to talking to you very shortly. Thank you.